contribution to the M-Pesa story is actually designing and putting in place the model.
Now you have Loop, you have M-Shwari, you have Fuliza, right? So let's say this is around 2019, 2020. My understanding at the time was now Terminals was breaking at the seams.
Completely.
It was completely falling apart.
And not just in Kenya.
Yeah.
Remember, in 5 markets.
Exactly. Welcome to F Squared, the podcast of the Frontier Fintech newsletter. I'm Samora Kariuki, and today I'm joined by Eric Muriuki, the architect behind M-Shwari, co-creator of Fuliza, and now CEO of Loop DFS. In our conversation, we uncover the hidden stories behind the creation of M-Shwari and Fuliza, dive into the decisions that shaped Kenya's digital credit landscape, and trace the evolution of Loop into a Pan-African fintech platform targeting 10 markets in the next 3 years. Eric also shares lessons from building financial infrastructure at scale and how he sees AI driving the next phase of innovation in African fintech. If you find this episode valuable, make sure to subscribe to F Squared and the Frontier Fintech newsletter. Let's get into it. So, Eric, welcome.
Thank you.
And thanks for joining the show. Just for context, I followed a bit of Loop and NCBA for a long time. I think I met the chairman, Isaac, sometime 4 years ago, and I think he introduced me to you at your office.
Yeah.
And, very interesting story. But then I looked at your profile on LinkedIn, and you joined NCBA in 2007.
Yes.
And that was the time everything was kicking off.
Yes.
Right? Yes. So in my head, I was like, that's the guy I need to speak to. And I was like, I can't genuinely not have a conversation about fintech in Kenya without speaking to you.
Mm-hmm.
So I'm very, very excited to have you on the show.
Thank you.
So let's just jump in. Joined CBA in 2007. That's the time M-Pesa was kicking off. And you guys were partners, at least in terms of, you're holding the balances that are sitting behind. And you joined as the program director of enterprise transformation. So that clearly tells me that you played a key role in this entire thing.
Yeah.
What were you doing in those early years?
Okay. So M-Pesa launched in 2007.
Yeah.
I joined CBA at the time in July 2007. So, which then says I can't take credit.
Yeah.
I found something that was just beginning.
Yeah.
So when I joined CBA at the time, CBA was going through an entire replatforming. It had changed the strategy, and every bit of technology was being ripped out and basically bringing in new technology and putting the whole thing back together. And essentially changing our operating model. But we were keeping the same strategic focus. CBA was at the time a very niche, high net worth profile type of bank, where 80% of the business was corporate, 20% of the business was retail. So I came in to do essentially a hack job, pull out everything and reassemble a new bank. Simultaneously, the conversations with M-Pesa, actually M-Pesa had literally just started, was still in pilot. But CBA played quite an important role at the time. If you read a lot of literature, you'll hear some of the early stories of M-Pesa was that it was launched without regulation. Not true. It was actually launched with regulation. But Safaricom was not the regulated entity. The entity that the regulator was engaging with was CBA. So our contribution to the M-Pesa story is actually designing and putting in place the model that enabled for electronic money. It's a concept that didn't exist to actually be launched in a manner that the regulator feels comfortable with and they feel that they have some level of control, but the control was effected through CBA. So the structure that was put in place is what you call the trust account arrangement. Essentially, every unit, because when you have M-Pesa, it's just data that you have that says you have 5,000 bob. The real 5,000 Kenya shillings, now the fiat currency, actually sits in a trust account at
I can see,
CBA,
yeah.
and there's a heartbeat between our platforms and the M-Pesa platform that says yes. If an agent loads value, i.e. introduces electronic money into
Yeah.
the M-Pesa ecosystem,
Yeah.
we have actually taken the real Kenya shillings.
Yeah.
If you then come and buy float or essentially exchange Kenya shillings for M-Pesa
Yeah.
at an agent, that exchange we can show to the regulator at any time this transaction has actually happened.
Yeah.
And if you send money to someone else, we're able to give the regulator a full account of the value of electronic money issued. And it's maybe just to explain why that is important. Legally, Kenyan tender can only be issued by the central bank.
Yeah. Yeah.
And then through the fractional reserve model of reserve banking model of the banking ecosystem.
Yeah.
But here we are allowing a telco to issue effectively legal tender, but in electronic form. So if you think about it, that was quite a step change from how money and actually money supply was considered.
Yeah.
And to date, M-Pesa was celebrating 18 years just the other day. 18 years on, every market you go to, the regulatory model, trust account arrangements is exactly the same. So even when other regulators are developing their own regulations, they're just picking the Kenyan regulation. So to date, we've continued to be the settlement bank for the electronic money issued off the M-Pesa platform.
Yeah.
Of course, for risk management purposes, they've brought on more banks, but all the reconciliation is done centrally.
Yeah, and that's because you had built the systems and the knowledge. Interestingly, like when I was in banking in Burundi, that was like in 2015. EcoCash, was launching, and they went around all the banks saying that we want a settlement trust account bank, and people were like, "What are you guys talking about?" Luckily, I knew the story of whatever, so we took that on, and it was one of the things that helped that bank at the time really scale. So I've got a very intuitive understanding of the whole idea, and I even say like people talk about stablecoins now and always say those things were launched 18 years ago. What's the big deal?
Since the excitement about crypto, and there are some things that are different and would make me excited about crypto, but the idea of digital currency, M-Pesa was the world's first digital currency.
Precisely.
And the only difference between, say, M-Pesa and Bitcoin is the trust architecture. So with crypto, using cryptography to create trust that 1 unit of Bitcoin is equals to X number of dollars. And without cryptography, what we've set up as that trust arrangement is essentially then CB is acting as the trust agent that you can trust the value that you're holding in your M-Pesa wallet.
It's doing kind of just in a centralized model. Now, one of the things is that, of course, you mentioned that this was a primarily corporate bank, 80%, and even it was known at the time, CBA, Concours d'Elegance, all that kind of thing. It was known as a high net worth bank and a corporate bank. Then you were brought in to handle a lot of the tech. Was the tech being adjusted, or at least being retooled because of M-Pesa, or is it just it's been a long time and the markets are changing and we need to look at our entire tech infrastructure?
No, CBO was needing to change its own strategy. Not just because of M-Pesa, because even when we started with the M-Pesa, we didn't know where this thing is going. So that couldn't be our strategy. It's something that felt right. It felt like, hey, there's something here that looks interesting. We don't know what it is. They've asked for a bank to respond and help them solve this regulatory challenge, and we figured out that it's something that we can do. But maybe the story to tell is a few years later. I don't know how to tell the story, because the shift of CBA's strategy to be more fintech, because today I think the brand amongst all banks is well regarded as a leader in digital finance. That story probably came about a bit later. So if I narrate in 2 steps, one was 2011. Safaricom came back to us again and said, okay, we have another regulatory problem. Our customers are calling our contact center asking to be paid interest. because M-Pesa is not a savings account, but the habits that had formed, I have spare cash, I put it in M-Pesa.
Yeah.
And you find someone has held money in M-Pesa for a month. And it was very interesting. There's a large profile of customers that will be paid into a bank account, stand in queue at the ATM, withdraw everything, and then go to an M-Pesa agent and deposit. Because M-Pesa was more convenient for them than a bank. Yeah. But when they're keeping their deposits there and their deposits are beginning to accumulate, they're like, hey, I should earn savings. I should earn interest, sorry. So we looked at that problem and we're like, okay, it's possible. We just need to create the same way banks operate with a current account and a savings account. Then let's regard, because the customer already is regarding their current account, the M-Pesa wallet as if it is a bank current account. Yeah. So let's create a savings account linked to your M-Pesa wallet. And at the time, actually, this was back in 2011, 2012, we had to solve a number of regulatory or legal things. One, we had to figure out how to do KYC digitally. Yeah. Because if you ask every customer to fill a form, it's not gonna work. Kenya had just passed a new electronic contracting law. It was still a bill, not yet in law. Second, the government had just put in what we today refer to as the IPRS, Integrated Population Registry System. So every national ID was in one database. And we figured that actually if we had access to that database and we take advantage of this law that facilitates contracting, then we can design a journey where you start from your M-Pesa, which was still a SDK, and you sign a contract electronically using your M-Pesa PIN. So we had to convince the government, we had to convince the central bank.
What are some of the objections you were getting at the time?
So fast central bank, I'm not sure I should be saying this.
So
the immediate response is like, oh yeah, we've heard of that system, but it's not working. Yeah. So we went in, we looked at how that database was set up. There were no APIs, there's no redundancy. So we actually made our own investment to improve the technology around the IPRS system so that a third party can securely connect, run a query and get a response. So build an API wrap around it. Then also just work with lawyers to convince the regulator that this bill, which CBK had fortunately also contributed into, actually then gives us a way of a pathway to design a customer journey that I can sign using my M-Pesa PIN. And it is legally a contract. Essentially, I give you terms and conditions, you can view them. So there was quite a bit of pushback because you are shifting paradigms. And initially, here I'm telling the M-Shwari story. What M-Shwari was supposed to be at that time, it was supposed to be a savings-only product. And the thoughts we had at the time, M-Pesa had 15 million users. Today, 33 or thereabout.
I think it's 35. They announced today.
They announced today, 35 million. Is every M-Pesa wallet automatically would have a savings account. And the balances in your wallet will start earning interest. Now, back to CBA. CBA at that time had 60,000 customers. M-Pesa has 15 million. Now, the technology problem we had to solve, the technical problem we had to solve is how does a bank with 60,000 customers and technology for 60,000 customers overnight
open 15
million? And I would say we took a very wise decision at that time where we said, okay, let's not try to scale up the existing tech. Let's build new tech. There weren't fintech platforms then. So we actually just used a conventional banking system, but we had to do a lot of changes to...
Is that Temenos?
Temenos T24, So we had to really...
And it's not built for that.
It's not built for that. To get a bit technical, a single transaction on T24 Temenos will leave you with a data footprint of about 24 KB. If you're doing 1 million, 2 million transactions per day, the amount of storage you need, and storage then was still very expensive. So we actually had
and this 2011.
2011, So we had to re-engineer T24 to reduce the transaction footprint from 24 KB to 2 KB. So to just lower our cost of storage, DB costs,
and so the latency of those transactions.
So we took that decision which was both strategic and technical, because if I bastardize the system, it can't be used for conventional banking system. So we had to build a whole new tech stack for it.
Yeah. And let me just get it right. You had 60,000 people sitting on a separate core banking system.
Yes.
And then you went out to terminals and said, we want a T24 that is separate from this core banking system.
Yes.
And then you found a way to now do like the centralized reporting and all that stuff.
Yes. Now, I mean, the reporting never happens on the core system. So you extract data into BIs and so on. But the core processing system, we had to really re-engineer it. And fortunately, as I said earlier, when I came into CB at 2007, that's when we introduced Temenos T24. So I knew it probably even better than the Temenos engineers. I knew how to hack it out. But the mistake we made is we went to the regulator after we've built the platform and spent a lot of money. And the regulator said, no, you cannot move 15 million users. These users know Safaricom. They don't know you. So you have to sign up each one of them one by one. So your business case, which was saying 15 million customers on day zero, is now 0 customers on day zero. And you have no clue you're not thought about scaling.
So the initial idea was automatically give everyone.
And so that you can pay interest off the bank.
Yeah. And just inform them that you now have a savings account.
Correct.
Yeah.
And it's basically you just activate. So I said, okay, you now...
So it's from an opt-in to an,
Yes. Opt-out, actually. You can now earn interest on your M-Pesa balance. Press 1 to continue. But then the regulator said, no, you start the journey from zero. The customer has to know who you are, what you're offering. They then sign. They sign a contract. But digitally, you must verify their ID. So we had to solve a lot of things. But then we knew we were in trouble financially, because when a bank takes your deposits, they owe you interest. So that's a cost. How do we make up for that? Fortunately, I was reading up at the time on the use of alternative data for credit scoring. I was actually doing it as my MBA thesis.
Okay.
My background is math and computer science, so that's what I was studying.
That's your wheelhouse. That's what you're comfortable with.
So we went to Safaricom and told them, listen, we think we can add credit using payments data. Had never been done before in the world. So give us some anonymous records. Let's see whether we can build scorecards off this. And we built...
And this is happening when the regulator said no.
The regulator has said approved under these conditions.
Got it. If you cannot... So after you went back to the regulator with the savings, they said, you can do it under these conditions.
Yes.
And then now
I have no business case.
Yeah.
My business case is bust.
Got it. So now you go back into your board and you're like, okay, the story has changed. Now we are asking if we've already done this investment.
You don't go to the board when you're in trouble. You go to the board with a solution.
I guess like in my head, I mean, like you have to go back to the organization and find a solution that you can go back to the board with.
Correct.
And so what you're saying is that to make this thing work, let's figure out a credit portion. And at the time, you just happened to be studying about alternative lending. So what it was, just to summarize, is that the savings story was like Safaricom brought the savings story.
That's a problem statement they came with,
But then now you figured out we actually have to do a lending story.
Yes.
Okay.
We had to find more ways of making revenue. And there was no reference anywhere in the world. So we just had hypothesis. We looked at their data. We're like, okay, you know what? Start. Then the big question of, do you start with a pilot so that you learn? Or do you start with everyone? Now, our partner wanted savings for everyone.
So you can't say lending for a few.
Yeah, so we took a view that, you know what, let's start with everyone. And what's important is our ability to respond. Can we respond fast enough? Most importantly, as customers are signing up, they're taking loans, what are we observing? Because we took a gamble that this thing is not just new for us, it's also new for customers. Today, if you start a digital lending product, the market is very wise. They know how to...
They know how to
if
play
you're not
games.
wise, you lose your shirt. Yeah, so we had the opportunity to say even the market is learning, so we think we can learn and adapt faster. So we launched M-Shwari as a savings and credit or savings and loans service. Our projections was 1 million users in 3 years. We got to 1 million users in 41 days, and it could have been faster because M-Shwari actually was breaking M-Pesa.
Yeah.
A radio ad goes out, the number of customers who attempt to sign up, M-Pesa crashes. So we even had to stop all comms, and it was very interesting. There was about 2-3 weeks when we didn't get
Sleepless
much sleep.
nights.
Yeah,
That's an interesting story because it's told it's as if it's the CBA systems that are now breaking, but also the
CBA was not known.
Yeah.
The target market for M-Shwari didn't know CBA.
Yeah, and they didn't care.
And so even when we were doing the brand strategy, actually my colleagues at the bank were concerned that a mass market product will dilute our brand. So we didn't want any association. If you look at the M-Shwari brand, it looks and walks like M-Pesa.
Yeah.
It does. You don't see any association to the CBA brand.
Yeah.
Of course, today it's a different story. It's the NCBA brand is very proud to be associated with M-Shwari. Yeah, and that really was the start of NCBA building our credibility as a digital leader.
Yeah.
That was 2012. And spent a lot of time the next 3-5 years, because we've then rolled out the same service to Uganda, Tanzania, Rwanda, Ivory Coast, which is now operating it in a francophone market. Very different regulatory jurisdiction, different sets of partners, telco partners, that is, and building that off a shared service platform that's based here in Kenya. So I would say another dimension about our story is we probably were the first financial services institution out of Kenya to diffuse into Africa. I don't think there's another Kenyan financial service institution in West Africa, specifically Francophone West Africa.
And so we'll have a discussion around that. So just chronologically, now it's 2012, right? And let's say it's 2013, and you've built, M-Shwari now is working. You've learned the motions around how do you staff this, what kind of reporting works, what makes sense, what doesn't make sense, and it's generating revenue, right?
Yes.
Because right out of the bat, the default rates are very low, at least in terms of what you'd expect by just giving, throwing money on a helicopter, people actually paying back, right? And so the bank now has really built something interesting, and it works because now, in terms of the brand dilution, the brand is not being diluted. You're making money, everything is hunky dory. You've gotten this thing that's really boosting your balance sheet, and you actually have a way to make money, right? But around 2014 is the time, if I'm not wrong, that you now did Loop. Is it 2014?
2017.
2017.
Yeah, but the thinking actually started around that time. Because we still had a bank to run. And then there's this new, we were not even calling it Fintech at the time. It was just
a new venture.
A new business venture was actually the name of
exactly.
So it was just a new business we had. And we could see the bank brand actually wasn't growing. And when you look at our demographic profile within the bank, it looked very much unlike the demographic profile of the country. Banking also on the corporate banking side, remember 80% of our revenue was corporate, was also getting very, very competitive. The large corporates particularly were beginning to have a bit more market power than the banks from a pricing point of view. So we had a problem to solve. How do we grow the bank? What's the next growth area for the bank? And it was clear that we needed to attract younger retail customers, and we also needed to be more appealing to SME businesses. But we did a brand audit, and it was quite clear. The market responded to us very clearly that the persona they associate with CBA at that time was actually the name that was used most often was somebody like Chiarini or old money.
No, it's true.
So the profile of customer that we were trying to attract would walk right past our branches
without even noticing.
They look at the branch and like, okay, it looks nice, but I don't think I'm welcome there. And they go open a bank account with another brand which they perceive to be cheaper. But when you go into that branch and you look at their tariff, they're actually more expensive than we are. But the aura the brand has is you only walk in here when you have money. Yet it's cheaper here than where you've gone. So what we then set out to do is to say, okay, let's build a service. We had a banking business whose demographic, I was saying, was very unlike the demographic of the country. And this is now 2015, 2016. So we did a brand audit and we were like, okay, our brand is difficult to sell to a more youthful profile. The average age of a CBA customer at that time was actually in their 40s, 46 or something.
Yeah, that's quite high.
A 46-year-old, I can tell you, I've been there. They have more debt than they need. They have taken their mortgages. They have done their credit cards. There's nothing new you're selling to them. So we set a goal to drop the average age from 46 to 33. Now, to get there, you don't add more 40-year-olds. You actually add more 26, 27-year-olds. So we then crafted this strategy to say, okay, let's create a digital bank. So even the words that we use today, neobanks, didn't exist then. So we then developed the Loop brand. The persona of the brand was very different from the persona of the core bank. It was supposed to be both consumer and small business. But for various reasons, we only went ahead with the consumer proposition, which we launched in 2017. And I can tell you the technical competencies that we have in the industry today were not there. And it's not too long ago. It's 10 years, 10 years ago. So we made a few... I think Loop was a hits and misses. We had some very good hits. I think we created a brand that really hit the sweet spot. Brand, we had a communication strategy that also delivered, I would say. We set to hit an average age within Loop of 26. We actually just bang on at 25 point something with regards to age. We were signing up customers. So we could see we had actually tapped onto something. Remember, simultaneously, we're still running we call it the B2B business. With the telcos, we're expanding to other markets. But how we got to have that view that there is a market for a fully digital bank is because we were seeing more and more of young customers going to a bank is not a thing. It's actually a nuisance for them. Second, the maturity of digital or mobile banking services then was quite low. If you just go back 10 years, what every bank was offering was very, very rudimentary. But because of this other business, we started attracting a profile of talent that is far more digitally capable. That enabled us to then imagine a strategy that is 100% digital. So back in 2017, you could open a full bank account, get your debit cards, and do everything a banking customer can do without filling a single form.
And the context here is that your entire legal and compliance team have already gone through these hoops of convincing the central bank about digital onboarding.
Exactly.
So it's not a new conversation in the bank.
Yes. So you see, that time when we started in 2012, 2011, we were writing new paradigms. But now we'd had 3-5 years of that new paradigm. So not just our technical team, but even our legal team, our operations team, everyone has become now digital, literate or native. So then innovating was much easier because you need every part of the organization. And now each part of the organization was now digital first.
And they need to know how to play their role.
Exactly. So we launched Loop in 2017. And I would say, with regards to what we wanted to do with it, we were quite successful. But the thing is, we never stopped listening, learning. But what we started seeing, actually, all the new guys, the new bank, the Monzos, all the new neobanks that are opening up in Europe, were comparing it. We're like, hey, actually, what they're offering, we have way more than that. But of course, our infrastructure, particularly the concept of open banking, had already started advancing in Europe. In our case, nothing like open banking. Even to date, you don't have true open banking. APIs were unavailable at the time. So being able to integrate to payment gateways, to data repositories, credit reference bureaus, things were not working as easily as they were now. So when you consider what we had built at that time, I would actually easily say that Loop was probably not the only one, but amongst the world's first 100% neobanks. And I think one thing I would say about our industry, whether it's Kenya or actually Africa, we haven't quite learned how to tell stories. When digital currencies are being launched in Europe, they are told like it's such a big story. But we've been doing digital currencies.
I mean, and that's the big idea around frontier fintech is it's like, you know, I always say that African fintech is way more important than any other fintech in the world because things are being done brand new here. You know, across Europe, you hear checkout experiences, and like, what is a checkout experience? Like, there's way more to fintech than checkout experiences.
So I think the work you're doing in terms of telling the stories, everyone is now talking about Revolut. Most of what Revolut is doing today, we had done in Loop, but we never built the language. So even language, we don't create the language of fintech and neobank and digital currencies. Yet we are doing them. But another story also to tell is, some time back, I looked at the revenues various Kenyan fintechs are pulling just from other African markets. And it was equal to the value of tea exports. And tea was our highest FX earner at the time. And I think a part of the story to be told, particularly about the Kenyan fintech industry, it's time we doubled down to say that fintech can actually be a serious export. The same way the US, tech is one of their tech services, whether it's the social medias or financial services, is a very big part of their export. We haven't regarded as a country fintech as an export category. I can tell you for free, we have far deeper technical talent in Kenya. We have basically the factors for being competitive, the factors of production are very well developed in Kenya relative to any other African market. And if you look at the and you're creating high value jobs. It's not just, with all due respect, it's not tea pickers. So it's time, I would say, not just to the industry, but also to the government to actually consider fintech as an export category.
And you know, it's small things. So I was running a small bank in Burundi, and you know, one of the challenges, for instance, is that you've got this tech talent that needs to go to different countries and do jobs, but a flight to Burundi is $500, $600. If you make it $100, someone who didn't plan to go will actually go and come out of there with a contract and actually make it. You know, those are export proceeds, as you call them. So there's a lot of nuance around how do you actually now, you know, because the tea industry has an entire value chain. You need to start working on the value chain aspects of fintech exports in Kenya, and that includes transport, which is a major issue. But it's interesting you bring that up. Now, this it's 2017. You've launched Loop. To be honest, within the market, I think that was one of the best launches I've ever seen.
Thank you.
And Loop, at least version 1, and we'll come to version 2.
Yes.
Loop version 1 was extremely well regarded in the market. And so you have B2B that's working well. You have a consumer business
B2C,
that's working well. And the story of M-Shwari is that it was, a mix of Safaricom led and CBA led. So it was a meeting of minds in terms of the final output. How did Fuliza come about? Because Fuliza came about in 2019. So what is the genesis of Fuliza?
Actually, interesting. Maybe you'll be hearing this first on on your show.
Yeah.
We went to our partner Safaricom with the idea of Fuliza in 2015, 2014 end November or 2015. Because we could see we were also users of M-Pesa that banks have overdrafts. Your current account can have an overdraft. And we already were on the driving seat. We could see your M-Pesa wallet is your current account. Then you have your savings account. And then you have your loan account. The one piece that was missing on M-Pesa is some current accounts are permitted to overdraw. And we could see how that plays out in a conventional bank account. And we told them, listen, we think we can do this. But at the time, M-Pesa was migrating its platforms from, was it Germany, the operations in UK. So okay, great idea. Let's pick it up later. Now, the later happened to be so much later. And many other stories have been told in between, which I won't get into. So much later, then we launched Fuliza. But it's at that time also, the idea we had put into our partners' minds, they now also had data to reinforce it. The number of M-Pesa transactions that will fail due to insufficient funds, that's the data point. So this failure should not be a failure. It should be permitted to. Then we take the credit risk. What is also not known is you only see when a customer attempts to do a transaction. But there are many times a customer asks, how much is it? It's 2,000. They check, they have 1,500. I'll come back later. So that you never see. The only time you see is when I attempt, then you get. And it was a significant double-digit number, the proportion of failed transactions. So we said, okay, let's give it a try. And if M-Shwari was successful, Fuliza, I would say, was, in terms of number of customers opting in, was even much more successful. Also appreciate with Fuliza, with M-Shwari, if you need credit, you first come out, go to M-Shwari, borrow, then come back to continue your transaction. But with Fuliza, it's within. So it's an embedded finance component. Again, language that is now being made mainstream, embedded finance. Fuliza was the first embedded finance, And
it's most successful. I think it's the most successful in the world. I can think, of course, there's Alipay and Ant Group that's done a good job.
Yes, but
if you ask me,
they're in a country of 1.4 billion.
Exactly.
We're in a country of 55 million. Fuliza today, we are doing about 3 million transactions per day, turning over 3 billion Kenya shillings every day.
For context, that's around
in dollars,
20 million bucks.
22, 24 million dollars every day.
And I think, I was looking at the numbers. Fuliza disbursements were 900B. I'm sure it was just around 100B.
Yes.
So that adds up to your 1 trillion total digital disbursements.
Yes.
And so it's 9 times that.
Yes.
And even besides the numbers, like if you just look at the cultural context, Fuliza is a term just like Google. Like, are you using Fuliza? Are you Fuliza something?
Exactly.
So it's way more successful than M-Shwari.
Yes. And I think I speak to a lot of people who run fintechs, and including, there's a lot of foreigners who come into Kenya to launch or build, either to tap the talent that is here. But another reason which I have come to really value, I've not come across, of course I haven't worked in every market, but the Kenyan consumer of digital financial services has developed a really good sense of knowing what good is and what good isn't. Such that you will see some fintechs foreign, they come and build in Kenya. They even launch in Kenya, but they have no interest in the Kenyan market. Then as soon as they figure out their product strategy, the operating model, you find they've launched in Indonesia or in Brazil or somewhere. And part of the credit that needs to go to fintech innovations in Kenya is not just to the suppliers, but actually to the consumers. Kenyan consumers will try everything. And if you're observing how the consumer is behaving, they will actually shape how to build and develop your product strategy.
Exactly.
Yeah.
It's a very interesting point. And it's something you actually feel because, I've worked in other markets, and I think the big thing is that there's a very high sense of curiosity in the Kenyan consumer and a strong sense of tinkering and seeing what they can get done. Of course, actually, Kenya's got very high literacy rates, very high tertiary enrollment rates. So, people are switched on and they know how to pick things apart.
I mean, even the thing we saw in June of last year, Kenyans are restless. They don't get satisfied easily.
Yeah.
And to me, I think that's the trait that has caused the Kenyan consumer to be the best at giving feedback on what's on, what's working, and what isn't.
Yeah.
Yeah.
Very switched on. So now you have Loop, you have M-Shwari, you have Fuliza, right? So let's say this is around 2019, 2020. My understanding at the time was now Temenos was breaking at the seams.
Completely.
It was completely falling apart.
And it's not just in Kenya.
Yeah.
Remember, in 5 markets.
Exactly.
So we got our gray hairs then.
Yeah.
Every partner was unsatisfied with our quality of service.
Yeah. And I'm sure the CEO of Safaricom is calling you, the CEO of MTN is calling you.
Central banks
it's
are calling.
all hands on deck. These transactions are failing. But there's a lot going on. So you have a B2C operation in one market that is still growing. You still need to pay attention to it. You have Fuliza that you've just launched, and besides the technical issues, there's a lot of other issues that you have to take care of. But I think at the time you decided to now do a major overhaul in your underlying technological infrastructure.
Yeah.
You kind of now got a new system, but I think this was also the time the merger was happening.
Yes.
Right? And so, you're juggling quite a number of balls. So before we go into now like the corporate structuring stuff, because I think there's a lot to be said about moving this technology from CBA to NCBA. Walk us through now the technological decisions. I think there's a Huawei kind of private cloud, and there's a system called Murong, right? That offers now
clearly
the core banking systems. I've done my homework. Does the core banking system, call it core banking system. Walk us through how that came about, especially the vendor decisions, why these guys, and how you set it up.
Yeah. So context. So first you're calling it Loop Release 1 and Loop Release 2. I trust you mean Release 2 is what is in the market today.
Yes.
Internally, it's actually Release 3.
Okay.
Because in between Release 1 and what is in the market today, we actually did a slight shift in our branding of Loop. It was still a digital bank. Because what we're also seeing is the most profitable customer, I can tell you, for fintech types of services is aged 33, 35. We had been too successful with bringing in the younger, more youthful customer. So we had to figure out, how do I bring in the older customer?
And just for that, let me just stop you for a second. Why is the 33 and 35-year-old the most profitable? What exactly are they
most attractive? First, just customer lifetime value. You convince this customer. If you convince them, they stay with you longer. With all due respect, a 22, 24-year-old is still testing. What's my experience here? What's my experience here? Before they start settling into
it's kind of like dating.
Yes, actually that's the way. They're dating you, and then by 33 they're married.
They know what they want.
Yes. But then the 33-year-old is when probably kids have emerged.
Yeah.
They're thinking about home ownership. They want to get first car or upgrade into a better car. They are thinking about their MBA. So basically, life is beginning to the serious part of life is beginning to happen.
Yeah.
And my view, a financial services partner, a bank actually has to be one that is a real partner to life. So at that age is when life is really beginning to become bigger tickets. And you want to be with the right bank at that moment. So at that time, if you're the right bank, then that customer, you're able to engage and capture much more value with that customer. So if you recall, we launched Loop Release 1 with the tagline, "Unbank yourself." We got to a point where customers actually were not sure what to do with. Is this even the Loop stores that we had guys walking in asking for ice cream because we looked very much closer to an ice cream shop than a bank. So we needed to bring a bit of identification, or rather affinity or familiarity with what the customer knows to be a financial services provider. So we toned down a bit on the colors. The language also changed a bit, but the core proposition remained pretty much the same. But that's also when the merge was happening. So we were not just shifting from a very young, exciting brand to a bit more grown-up brand, but also shifting CBA to NCBA. And NCBA also had its own brand, let me say, brand manual that we needed to read off, to read from. So that was the kind of change that was happening. But simultaneously, we had started observing what's happening with Alipay in China. And I was very convinced that the future of financial services will be digital platforms. I took my first trip to China actually around that time, 2019. And what I saw just knocked. My first trip to China is, I remember sitting at my hotel room, airport to hotel room. I sat down for like 20 minutes asking myself, the picture I had of China before I landed in China is very unlike what I have just seen. And you realize there's a lot of misunderstanding about what China is. But what is very clear, that they will shape the evolution of digital financial services. They have been and will continue to for the near term. And I figured,
it's interesting you say that. I'm currently reading a book. It's called On China. And the interesting fact from there is that they've been the dominant economy in 18 of the last 20 centuries. Right?
That's correct.
So they just, kind of lost it for like 2 centuries.
Yeah, about 200 years,
But everything that's happening, it's actually trends with the past.
Exactly. So, I mean, Kenya was still the poster child of digital financial success at the time in 2019. Of course, thanks to M-Pesa. But I was in the streets and a beggar has a QR code. The beggar in the streets, we pay them with a QR code. And we are only just beginning to talk about QR codes. Guys are smiling at a cashier and they've made a payment. This is 2019. Business, China essentially has brought in business models that were birthed in China. They did not exist anywhere else before. And from there, I was like, okay, this is a direction we should seriously consider. Came back, we put our thoughts together and figured out we need to. And banks were also catching up with regards to the bank's own capability with mobile banking, internet banking. So the differentiation we had with Loop was beginning to narrow down. And we figured that we already have a successful bank, NCBA. We've built a new digital business. How do we have these two business models grow, and how do they complement each other? And we figured that probably what we need to do is pivot Loop out of banking and pivot it to be a digital platform. Being a digital platform, then even M-Shwari is just what you call platform as a service to a partner. So the core platform now, everything now is Loop, but as a digital platform. We then also needed to go deeper into payments. And we had to also ask ourselves, the brand that we have curated, is this a brand that can stand out in a very competitive retail space? So we figured we'll need to get a bolder, more energetic brand, and hence the shift from the very genteel green or teal color to the orange that we're very excited about now. So there was quite a bit of strategic choices we had to make in terms of, one, the core. What is our core offering? Who are we? What is the brand? What are we offering? And to whom? Which also then led to a change in technology. So it's not just because T24 was falling apart, but also we needed a technology for a completely new business model. And there was nowhere to buy that kind of technology. So it's not most banks go and see a good idea, they buy the technology, then put it out as a product. So we actually said, let's do our research here in China. 2019 I was in China 3 times to be able to say, yes, this is the technology stack we think we need for this business model. And in parallel, you're socializing a new strategy to a new set of stakeholders, because now we are 2 banks that have come together. So that was an interesting period. And then there was COVID, which also meant investment decisions were harder to make during that COVID period.
Because of the uncertainty.
Yes, there's a lot
and
of
uncertainty. And you still have to travel to China.
Exactly. So we eventually were able to assemble a lot of moving pieces together. And we actually did not upgrade from Loop Release 2 to 3. It was a complete shutdown, this one. Turn on another, because the tech was completely different. The proposition is completely different. The brand also was very, very different. We retained the brand name. We had actually considered using another brand name and pivoted from banking to a digital platform. That was in January 2023.
So let me now understand how it all works together. So you have, let's call it a loop system. Loop platform. A loop platform that on one hand runs the loop consumer accounts, the APIs and everything. And then on the other hand is offered as a platform to your traditional telecom partners.
Yes. So we have a core platform, which is Loop. And this core platform has, I actually like to put it, it has the financial infrastructure for the internet commerce, if you look at it that way. Then it has 2 go-to-market modes. One is B2C, where we go to the market directly. That's Loop. And B2B, or platform as a service, where you don't go to the market directly. You go to the market through a partner. Specifically, that is B2B to C. Then we also have PaaS, platform as a service, which we are just launching in Ghana, where your brand, your name never goes to market. Even the regulator doesn't need to know that you're the service provider. So we find partners, we give them the technology, and we operate it. So the service that we'll be launching in Ghana, the tech is seated here in Nairobi, the operators are seated here in Nairobi, but the partner bank, so if we have a partner bank, it's not NCBA that is there, gets the regulatory approval and actually is in the market, is a regulated owner of the product. We also have the mobile money operator in that market as the channel partner. So legally in that market, the only 2 entities known is the telco and the bank in Ghana. But the product, the credit scoring, the operations, the second line contact center, everything is running off our platform here in Nairobi. And we work out our monetization models in that way.
So that's actually quite interesting. And once you put it that way, then it's clear you're in the foothills. I mean, you're just beginning this journey, because with that platform as a service, there's so much you can do in terms of like additional partners, whether it's people wanting to launch their own, fintech propositions, non-fintechs that is, and even just fintech as a service where someone can just come in and you help them set up everything from scratch.
Exactly.
But the thing about is that you also made the decision to split this into Loop DFS. At the time, there was new business ventures, but now you actually took the decision to register Loop DFS, have it standalone, even sit separately from the bank, right? Were there any considerations about, because about getting your own license?
Yes. So
Getting your own license and now going to the market. And the reason I ask this is because just as a customer, right? When CBA is selling Loop, right, the story is much more clear, right? That this is the digital arm of CBA, right? Now under NCBA, there's their own, there's a retail app for NCBA. There's also Loop, right? So it kind of creates this, who's behind Loop, because customers are lazy, right? They want a very simple story. What are some of those decisions around what is the actual ideal corporate structure for Loop? Is it to sit within, as a separate entity? Should it be licensed as a bank? Should it be licensed as an MFP? Now that you're doing platform as a service, is it really necessary to be a bank? Can you just be a technology company? Do you feel you're optimized in terms of your corporate structure?
So let me explain the strategy. We are a platform business, and how you go to market, that is just that's strategy. And as a platform business, you don't just provide technology.
Yeah.
You can stop there. Providing the technology, we also operate. We also provide capital. We also provide regulatory regulatory licenses. So what do I mean? Tech, fintech or agri-tech or ed-tech, if you want to run your ed-tech service and you want your ed-tech service to have a wallet, we can actually host you. But for us to host you and provide you wallet as a service, I need to be a licensed issuer of eValue, or essentially I need to be licensed as a PSP.
Got it.
So we also have Loop DFS is a holdco. Loop DFS owns Loop Payco.
Okay.
So Loop Payco is actually licensed as a payment service provider, which then means I can issue wallets, own wallets, or issue wallets on behalf of.
Yeah.
If you're an agri-tech, and we do have some very exciting developments around that, agri-techs that are running a full agri-tech service, but they want to give credit to their farmers, we don't need to know those farmers. Those farmers don't need to be our first-party customers. We then provide you with credit. We actually put in the capital, and we operate the credit life cycle, ensuring that loan is paid back. You focus on your agri-tech. So if you understand the strategy in that way, even without B2C, we have set up a corporate structure and a regulatory strategy that enables us to pick up the licenses needed for us to operate as a full platform service. So if you just want a regulatory solution, we already have the licenses, and we're doing this. I talked about Ghana. We are in engagements with the regulator for our own licenses in Rwanda, in Uganda, in Tanzania. So Loop DFS as a corporate structure to operate the platform business is needing to engage directly with regulators as a licensed entity. But we have the pure platform play where we don't need to be the licensee, but we work with licensed financial institutions. So again, depending on what is the opportunity, what is our strategy to create and capture value, are we better off doing it ourselves, or are we better off doing it in partnership? We then create the market strategy for each market. But you start first by defining yourself as a platform business. And Samora, I would challenge, I don't know of any other platform business in Kenya that is particularly multinational And we've set up to say we're not just a fintech, we are also a fintech for other fintechs, other edtechs, other agritechs, or basically fintech for xtechs.
Yeah.
Yeah.
And usually that's the conventional name for that is banking as a service. Do you think of it like that?
No. On our platform, banking happens. But on our platform, you'll also find a deals marketplace, which is Loop Discover.
Yeah.
On our platform, we have digital marketing tools for merchants.
Yeah.
Merchants on Loop also have inventory management, supplier management, payroll management tools on our platform. So it's not just banking. Banking is one of the things that happen on the platform. So platform as a service is really what we are.
And I think that brings me to a question I was having. Of course, there's Loop DFS. How then do you structure yourself like organizationally, right? Because you have different KPIs and different things matter. So, for instance, for like the Fuliza business, you're tracking amount disbursed, repayment rates, and etc. For the B2C, you're looking at how many accounts have been opened, what's the revenue per customer, and the cost per customer. There's all those kind of things. As Eric now sitting on top of all this, how do you break down the organization from this specific department focuses on this? How do you set that up? How do you set up the organizational structure to optimize go to motion and make things legible, especially for you?
So first, appreciate we're in 6 markets and continuing to expand. Another 2 this year.
Yeah.
The way we are structured, I think if it's to speak to the leadership team, it's
the leadership.
Yeah. So we only have one of the CXOs whose focus is purely Kenya. That's the Chief Commercial Officer.
Yeah.
But we have a CTO, Technology Officer, COO, but our COO is specifically running the operations, and almost everyone in our operations team is also a technologist. So it's also led by a technologist. Yeah. Maybe I should, just to give you context, 68 million users in 6 markets and an operations team of 40. So when there's nobody pushing paper, because it's essentially all the persons in our operations team are actually supervisors of technology. And increasingly now we are bringing in more and more AI into our ops function. So agentic AI is an area we are fast putting a lot of interest and investments in people before the investment in technology to just understand how do I employ persons to manage AI agents. Okay. So Chief Commercial Officer, Chief Technology Officer, Chief Operations Officer, a Chief Marketing Officer, because it's a brand to be developed and stewarded in multiple markets. Chief Product Officer, of course, how we organize for innovation and delivery. Chief Strategy Officer, and a Chief Risk Officer. And it's not just credit risk, but enterprise-wide risk. And also governance. So we have an executive director responsible for our corporate governance. But all of these, other than the CCO, Chief Commercial Officer, are actually focused for all the markets. They have purview and responsibility in all markets.
And how is the board governance, especially as it relates to NCBA and Loop? So do you have a Loop DFS board? And how is it overseen by NCBA?
I'm not sure that's entirely necessary. But Loop DFS remains a very integral part of the NCBA group. So when looking at governance, you actually look at it top down, starting first with governance of the NCBA group. And then you design the right governance structure and cascade of responsibility and accountability for all the businesses within that group.
Got it.
Yeah.
And it's a complex business.
It is.
It's not something that you can explain over a drink. You need some time to actually explain the entire thing. But I think what it is that the most if my understanding is correct, the most important thing is that you build a very robust platform. And then everything after that is context specific, in the sense that in this market, this type of go-to motion makes sense. In this specific, you basically have the primitives to do very different things. And those primitives will lead to now an evolution of entirely different business models down the line. But how someone should look at you is just as a robust fintech platform, right?
Yeah, and I think if you speak to how to go about building a fintech business, a lot of our fintechs are still at the product level. You're either a lending fintech, a payments fintech, or you're providing a specific service to businesses. And indeed, there is more than enough space for that. But the space we have chosen to play is to say, build a platform so that any product that can ever be offered by any fintech, the platform is able to offer that. And we can do it direct if there's a specific market we want to serve directly, or what is the case for most of our business is actually where you're doing it through others or enabling others to do it. Okay. So in that sense, when you're thinking platform, your planning cycle has to be longer range. Because if you get the wrong technology choice, and also the organization that you're developing, because that's probably even more important than the technology that you're building. The organization that you're developing doesn't have the two things. One, the ability to look forward and then come back to today and be agile in today's execution. Then you realize you've taken a big bet, because when your planning cycle is long range, then it also means your investment horizon is just as long, if not longer. So getting a decision wrong, it is so much harder to unwind. But you have to build in a future-proof way where you're saying, okay, what are we learning today that needs us to make adaptations immediately? And when you look at Loop today, release 3, we are now at a point where every 6 months you can actually see significant advancements in the offering, what the customer sees, and even what you don't see. Now, back-end enablements, security enablements, API level enablements. So we are actually building a pan-African digital platform. And I think one dimension that's important to speak about, whether in the US, there is a de facto platform in the US for consumers and merchants. You might argue somewhere between PayPal and Stripe. You go to China, between WeChat and Alipay. Those are the de facto platforms. You go to India, Paytm is emerging, or actually is establishing itself as the de facto platform. What is the de facto platform for Africa? So far, the narrative is dominated by mobile money. But to say, if China's 1.4 billion, India's 1.3 billion, Africa's 1.4 billion, which is who is going to emerge as a de facto platform, and that's where we're positioning ourselves to play.
So it's a long-term game. But I'd ask you this, and you correct me if I'm wrong. At least according to the financials, like the business made it's around $60 million PBT, right? I would imagine, and that's why I said correct me if I'm wrong, I'd imagine a huge chunk of this is the M-Shwari Fuliza play.
Correct.
Right? Quite a significant chunk. And so, a cynic would say that this is actually just a platform for telco mobile money kind of digital lending enablement, right? But as a platform play, you need now a kind of second wind that now kind of diversifies away from the mobile money and really establishes robust credentials as a true platform. Would you agree with that, and where do you see that coming from?
No, that's entirely true. And maybe just to explain a bit of my thinking or philosophy with regards to management and leadership. I have a team of about 300 people. I have a team that knows exactly what to do about this year's targets, I am not needed. To hit this year's targets, I am not needed.
Yeah.
My job is to look at where will the revenues 3 years from today come from, 3 and beyond. How do we build the ability and resilience for this business to get there?
Yeah.
The people, the technology, the regulation. And my leadership team, our everyday conversations are not about this year's revenues. It's revenues 3 to 5 years from today, or revenues that shall be significant 3 to 5 years from today. So in as much as last year, you can break down our income statement and say, yes, there seems to be much more contribution from this part of the business. You then must form a view 5 years from today. How shall you be relevant? To whom? What shall you be offering them? And that's why the platform that is still generating today's revenue is the same platform that we're using to build our posterity for the future.
And at least the good thing is that it's making money, and those funds could be reinvested into some of these now initiatives to create the second wind.
And also about making money, because I really want to say things that are relevant to fintechs. The thinking about your future revenues, but keeping an eye and focus on what your cash cows are today. It then means your cash cows, your today's revenue becomes your PE.
Precisely.
Because if you don't pay attention to that, I've seen fintechs run the circus of fundraising, which is, for many of them, it's a very exciting story, jetting here and there to raise $10 million, $50 million. But you then lose control of the plot. The focus becomes about investor return within a very defined window, as opposed to building an enduring business. So it's important to also understand, and one could argue that's an advantage we have over most other fintechs, but the advantage comes from the thinking, how you think about building an enduring business.
Got it. And now we'll go back now into now you've corrected me as Loop 3.1, at least the customer proposition. It's been I would say it's been a topsy-turvy relaunch, right? I wouldn't be wrong to say it's been a topsy-turvy relaunch. What's your right to win, right? And what I mean by that is that you're right. Other banks caught up. I wouldn't say caught up, but their propositions are pretty
decent.
good. They're decent, right?
Yeah.
You don't feel like you're missing out on anything, at least. And so, what's your right to win? And how are you thinking about it now? Then you thought about it as like, we actually need to get this 33-year-old guy. But now that everything is where it is at the market, are you still thinking the same way in terms of like you just offer a really comprehensive digital banking proposition to this specific guy? Or are you looking now more niche in terms of either SME or this specific type of individual who's probably got income from abroad, he needs to make payments or this kind of thing? Where are you looking at? Because and the reason I'm asking that is because there must be something in which you dominate. Like this is the thing that we are really good at. Because if you're just a good enough digital bank for everyone, it doesn't work, right?
Yeah. So first, let me just get one thing out of the way. We do appreciate and accept that since 2023, the relaunch of 3.0 had quite a bit of January 2023 and maybe 3 to 4 months after that, it was a testing time to our customers, and I really want to appreciate the customers that stuck with us. Also, we really were overwhelmed by how much our existing customers had come to love and associate themselves with the previous brand, or how we had projected the brand at the time. So when the change happened, even for things that were working, there's a lot of customers saying, "No, give me back the old, the old brand." And happy to say that we've actually won back that customer. and are continuing to grow. And the thing I believe that is causing this is, one, it's taken us some time, but customers are beginning to see that this is not another digital bank app. Loop is presenting itself, or at least the brand is getting clearer and clearer that Loop is a lifestyle app or a lifestyle service. I may not use the word app. Because if you recall about the 33-year-old I was talking about, when you asked me why is that 33-year-old most valuable, I did not talk about banking. I actually talked about where they are in life and what they are doing. So when we say lifestyle, it means whether it is payments for a cup of coffee, whether it is planning for a holiday, whether it is acquisition of an asset, a laptop or something. Those are the things you do in life. Now, Loop is the only service today. Probably, let me say this first. First, it is just way cheaper to pay with Loop. But we don't want to get caught up in a cost conversation. But indeed, it is something that some customers are aware of, and this value that they are saving about 40% of what it will otherwise cost them to either pay or borrow digitally. But on the Loop Loop, we have the Discover Epic, where I want to buy a laptop. You'll find deals for laptops there. So we are not a marketplace like any other e-commerce platform. We don't sell goods. We promote deals. So Loop merchants that have deals. So I want to buy a new phone. If there's a merchant with phones on discount, you only see deals on Loop. Second, you find the phone that you want. We have the best and lowest cost buy now, pay later service. So you can find your laptop there at a discount and pay for it over 6 months, of course, with the deposit. So the thing that we want to be known for, and we think the clarity about the brand is coming across, is that, one, Loop is your best financial services partner to do life with. And you cannot separate financial services from life.
You can't.
Anything you do will involve some transaction or the other. Now, are we able to find the best way or the best deal to achieve that? Second, do we help you through payments, savings, and credit to achieve that? Also, very soon, we are getting a lot of demand for just some smart budgeting tools, and we have something quite interesting coming in the works.
Now, I have a question on that, and it's there are two things that emerge from there. You've talked, the smart budgeting thing. My view of like financial services, especially, it's something that frustrates me with my banking service, is that it's still something I have to do, right? There's a lot of things that I need to think about, whereas you have all the data that I don't have to think about it, right? And you spoke earlier about the context is, you spoke earlier about how people pass through your old branches at CBA and say, I'm not needed here, right? And there's a lot of people underestimate the psychological barriers to financial services. Now, you have this kind of deals marketplace. How do you even define customer intent, right? Such that it just happens intuitively. And number two, why does it only have to be deals, right? Because if I'm a 33-year-old and I want a laptop, it's not necessary that it's the cheapest laptop, right? I just want a laptop.
Yes.
Because I was going through your kind of marketplace, and you're right, there are deals, but it's kind of like limited.
Just where we have deals.
So
I think the greatest thing about strategy is choice. And at times it's more important not the choice of what you choose to do, but the choice of what you choose to not do.
Precisely.
We are not going to be the best e-commerce platform, because e-commerce means I also get into the logistics of warehousing goods, building a delivery infrastructure, and so on. And I think there's so many different ways of customers finding the goods or services that they want and having them delivered to them. And first, for those profile of customers, anyone who is what I call the internet commerce, whatever you're selling, Loop, the merchant proposition, is a very good deal for you in that sense. So we'll enable you to actually get customers, you make collect payments from those customers, and we also have credit for those merchants, and credit of different types with no form filling whatsoever. But also for you, if you decide the deal we have here is not what you want, because not everything will be on discount, not everything will be discounted by merchants. If you find a phone where you want to buy it, the same credit facility that you have on Loop, you can go and spend it there. So it's not restricting you to just what we're offering, but you will find that the merchant you're buying from might also be a Loop merchant. Even if they're not a Loop merchant, you can still go and use your Loop Flex, which is the buy now, pay later service at that merchant. So we are not trying to be everything. And actually, I think that's just not sustainable. If a business limits space for other entrepreneurs, the market will outthink you. They will find other ways.
The market is always smarter than you.
Yeah.
And so where are you right now in terms of Loop, in terms of customers? Are you hitting target? Are you ahead of target? Where are you right now? And the context is that when you're launching it, you hadn't anticipated some of the blowback, right? So you kind of had to take a step back and rethink. So from an outsider looking in without knowing much, it would be logical to assume that you're not where you are. Is that the case?
So some metrics we actually on plan. We have just about crossed 500,000 consumers. We have about 178,000 Loop merchants. There's also a platform as a service play that is where we have agri-techs and ed-techs that are also accessing platform services, principally credit from us. From a revenue point of view, we are actually on plan on revenue. We haven't broken even yet. So on most key metrics, we have built a viable business. And I think I like the way you put it. We're actually at the foothills. We can see, or maybe we've stood on one hill, we're now able to see the bigger mountain. So there's still quite a bit of growth to go. The great thing also is our stance is Pan-African. So close of this year, Loop will also be in Uganda and Ghana, so that our infrastructure...
And that's the B2C.
Yes, the B2C. So that the investment we've made in tech here is not just... I'm not generating revenues from one market, but actually from multiple markets.
And you'll find, and I think you'll find, given where Kenya is right now, you'll find that I think some of the external markets might be more interesting. And the reason I say that, you've got the Kenyan consumer who is very kind of knowledgeable, but I think, M-Pesa dominance has kind of closed people's eyes. And I'm seeing dominance in terms of 35 million users. Let's
put it this way. Kenya is probably, with regards to digital financial services, your most competitive market.
Precisely.
So it's not just about M-Pesa or their size, but it's also, there are very many strong alternatives, whether it's or competitors, if I put it that way, whether it's other banks, other fintechs. So the competitive intensity in Kenya is quite high. Which I think is a good thing. Iron sharpens iron. Exactly.
It
So
keeps you on your toes.
Your statement that we might find it easier in other markets,
maybe not
to
easier,
some extent,
but
true. The competitive intensity might be lower, but that might also mean the customer awareness and adoption may not be as fast as the Kenyan market. Market readiness and those kind of things. Culture, I think we have the benefit of running the B2B business in multiple markets. You also understand the impact of cultural differences. Because not many brands have exported from Kenya and succeeded without a significant acquisition. So we're going into all of these markets green. And we are winning in these markets, at least a B2B business. So we also do appreciate that when you're exporting a brand, they're not waiting with open arms to receive you. You have to embed yourself into the culture, speak their language, and win their hearts for you to be able to build a business.
No, it's very you're very right. I remember just living outside Kenya and realizing that in some countries tomato paste is a very big business, right? And it's just down to food culture, and just moving one country south. The food culture is completely different. The way people live is completely different. The way people deal with their financial services also. But I guess now, given that you're a platform, it's kind of like a horse for courses kind of thing, right? You may not necessarily replay the Kenyan strategy in every
No, certainly
market,
we're not, yeah.
but you have the primitives to do what needs to be done in that market. It leads me to a question around AI, which I think is very important. I think it's those platform shifts, right? And I think the winners of the next platform shift in AI will be the kind of people who are now, I would call it cloud native, right? And have built, competencies around data and everything else. And I think, my view on AI is that fintech has already brought down the cost to transact, right? The marginal cost to transact. But the marginal cost of a relationship and customer service and customer experience, you still find people going to branches for that now additional contextual service, right? My view is that AI should now bring that down, right? Of course, from a customer perspective, there's operational stuff you're gonna do in the background. How are you guys thinking about AI? And it's the kind of thing that you can't ignore. If you're being honest with yourself, you can't ignore it. You can't say, "Oh, you're waiting to see what's going to happen." You have to engage. What are you guys thinking about it, and what are you guys doing about it?
So, with AI, it's like nowadays you can't go to a conference and say anything or present anything without saying AI. AI is actually, in my view, it's not the future. It's already here and has been here. When you're typing and autocorrect, that's AI. But the way I think about AI is in two ways. One, AI is not a technology you bring into your business. I actually think AI, for those that will win, will need to be something first that the leaders deeply understand. Because as you've put it, the use cases that will make a difference with AI are use cases that are highly contextual. Now, if you assume that business leaders have a very good grasp of the context of their business, then you cannot leave AI to be something that technicians do. It has to be something that you wrap around your brain as the business leader, so that you're able to see where the opportunities and where the greatest impact will be. So you may not need to appreciate AI to the level of the technician or the guy writing the code, but you need to understand it enough for you to find the opportunities and figure out how to reorganize the business for the greatest impact. So right now, any executive, irrespective of your industries, but certainly some more than others, AI has to be something you're eating for breakfast and not just reading articles, but actually getting yourself to really understand the fundamentals of AI, how to use AI, and then come back and do the business of changing your organization to be led by, not by AI, but by a leader who understands AI. And the first step then has to be that you have to think about your workforce. How do you retool your workforce? How do you train them? And how do you change the tools that you're using? I was quite excited about the story in Singapore where the government is actually paying for any 40-year-old and above that wants to learn AI and retooling them, giving you a significant budget to really retrain yourself, because they've understood it's the person that has high context and can use AI is going to be the most impactful person.
Precisely.
Yes. So then after you address knowledge and skill, the businesses that are better poised to succeed at, I think it's not about being cloud native, but actually your data strategy. In my view, it doesn't matter whether your data is on-prem or in the cloud, but do you have a strategy for your data that informs how you should organize your data? The core, or rather the data exhaust from your production services, where does it go into? How is it transformed and organized? And what is the layer of interaction that your different staff have to be able to directly engage with the data? So that now, as you're skilling the workforce and you're bringing in the technologies for AI, you have the raw material, which is the data. And the advantage that some organizations will get by using generalized AI will be quick, but the enduring advantage will be, in my view, those that actually bring AI into their proprietary data and use it to not improve but actually rewrite. I think it will initially be very internal focused. You're better managing fraud, you're better managing processing efficiency, enhancing controls using AI. And I say this very carefully, or rather do this very carefully, then start using the AI tools that you've built to service clients, to process leads. But I'm very convinced that if it doesn't start with the leader, you will have exciting experiments to talk about, but no impact.
100%. When I was talking about like cloud native, what I meant was that you've actually built data pipelines around how it actually works in a cloud native company, right? Whether it's on-prem or everything.
Correct.
You've built the data pipelines. And by extension, by having such an organization, then your leadership is tech forward, right? Because you're 100% right. Like, this thing is 100% contextual. You need to understand, everyone needs to think AI first, right? Like even if you're running a small business, if you have a process that you're running, the thinking should be, how would this look like if it was AI native, right?
Exactly.
If I'm doing marketing, if I'm doing sales, if I'm doing everything, how would this look like if it's AI native?
It's like today, even our hiring, any new job, if it goes to HR, I want to hire, you first must convince HR you've scanned and there's nothing that AI can do.
So you're not hiring anyone?
No, we are, because trust me, AI will need a pilot. So if we're hiring, or those that we have, we are looking to invest in them, but we're not going to hire going forward a job that AI can do.
No, you're 100% right. But then when it comes to the customer experience part, the way I've thought about it, and you're extremely right. In fact, if you look across JP Morgan, Goldman Sachs, DBS, everyone, there's this internal use cases first. Everyone is doing internal use cases, and then you slowly now start expanding to I think managed external use cases. But there's a risk of someone coming up with such a unique customer experience. Whether it's just a voice chatbot that knows you, that tells you, actually, you need to do this, you need to do this. Of course, there's issues around context in Windows and all that. Do you think it'll now create a kind of move towards this now purely AI player if other banks take time to now, do the thing internally before doing it externally? Like just like a land grab by AI native
No, that
players.
is true. I mean, that's the premise upon which guys like OpenAI have built their business models to say, we are going to cause a significant step change in how a service is offered. So customers will come to AI as opposed to going to their human agent. So there is always going to be that company that's at the, the bleeding edge. And I think you just have to know yourself. Do you have the capability to be there? And it is not just the tech, it's the organization, the human talent, the brand that you have. Customers will trust an AI agent from brand X and not from brand Y. Yet they're doing the exact same thing.
Exactly.
Yeah.
Now, just to wind up, I think just two last questions. 5 years from now, what does success look like for you as Loop TFS? Are you thinking about it in terms of this markets, these products, this revenue? What does success look like for you?
I think I'll define it more from a positioning point of view. We're clear where we are going. We want to be the most loved financial services partner, at least in Africa. In 5 years, we should be in no less than 10 markets. And if that is a statement that we are not saying, but our users, our customers are saying that this is the platform I love the most, this is my partner to life, then I'll consider that we've hit success.
You've succeeded.
Yeah. To put some numbers to it, on the B2C side, we're 5 years from today. Do we plan any longer that far out? But maybe just a slightly shorter horizon. In 3 years, we are looking at hitting 5 million B2C users, users and merchants. We have defined what our ARPU metric is for that. But more importantly, I think I would wish to define ourselves from a positioning point of view, the most loved financial services partner.
Yeah. I actually have a random question that just popped up. What do you think of the faster payment initiative in Kenya?
I think the market will decide.
Yeah.
I appreciate what the central bank is seeking to solve. Very many commentators have argued that they're solving something that's already been solved. But you also appreciate their role. I actually do make a case that you have to consider the regulator also as a business that has customers.
Yeah.
Their customers are banks, because who pays the central bank? And they must have their own strategy for how to safeguard and grow their market and ensure that they're managing the risks they see within their market. So not just banks, but regulated financial services institutions, because it's now broader than banks. So I can see from their perspective what they're trying to solve, but there's quite a bit of argument that that problem has already been solved. But those arguments are all been made from the supply side. It's either a payment switch, an incumbent mobile money operator, or KB as an industry. But even today, we have more than one payment switch. We have more than one way to send 1,000 shillings from one person to the next. And the customer always chooses. So if the central bank is convinced about the need for faster payment, the fast payment system, the market will decide. Yeah.
It'll be interesting to see. I think there's a lot of context around that. But then now to finish off, like you've done this for quite some time, almost 18 years now, even more. I mean, you started banking career way earlier, but at least this story is an 18-year story. Going back to 2019 when you did this entire transformation, what do you know now that you wish you knew then? That is kind of like can help other fintech founders and execs, especially around two major things. Building this kind of technology platforms and this whole idea of entrepreneurship, right? Like building enterprise within an incumbent organization. And the reason I asked that specifically is that for me, I think that is extremely important going forward. That kind of like building new enterprises from within is going to be a muscle that a lot of people need to build. And so what's kind of your core lesson around that?
Maybe before I respond to your question, just to buttress a point you've made. When I look at markets like Kenya and our context, particularly when it comes to investment capital, Kenyan fintechs, our greatest struggle is actually capital. But I think as an industry or as a nation, we have to acknowledge the way our capital is organized. It's very concentrated in the large established players. And that then is a challenge to such large established operators. And it's not just in financial services. I would say if it's in aviation industry, KQ should take a responsibility.
Yeah.
If it's in telecommunications, if it's in the food industry, we know who the large players are. So having a very intentional and embedded in your structure a way of driving intrapreneurship is something I think some magic can begin to happen if where capital is, they start thinking entrepreneurially. And it then creates the platform, at the risk of using the word, for other less capitalized actors to say, okay, this guy has built this, now let's build this on top of it. In as much as we say M-Pesa has taken up space in Kenya, if there was no M-Pesa, there's very many businesses that wouldn't exist today. And that was a case of intrapreneurship within a telco business. And I think we have also done our fair bit of contribution as NCBA. And if more and more, if the entrepreneurial mindset is something that is taught both in practice, where it's easier for me to see and learn or create my own remix of what you've done. And not just in practice, but also in theory. As we are revising the curriculum in Kenya, is entrepreneurship something that we actually teach? Because there's theory that can be taught. Unfortunately, it's taught too late. But more about the practice and even the whole idea of apprenticeship. I think that's something, the challenge is less to the startup part of our economies, but actually the more established players is where I think the challenge should be thrown at. To answer your question, I got caught up in reacting to your question as opposed to answering.
No, that's fine.
Yeah, I think maybe the thoughts that are in my head is one, build a business, not a product. Because building a business means you don't just, the greatest part of innovation actually is organizing resources faster or more effectively than your competition. It's not just about the brilliance of your idea. And ideas are many, and you might even argue, oh, he stole my idea, but trust me, he just saw the same patterns and the opportunities that you did. But innovation really comes from organization. How do I organize the resources and give clarity to the market about what my offer is? And you have to think about the whole business, not just the product or the innovation. And in that sense, when you think about a business, you have to think longer range than you would if you're thinking about an innovation. Because innovations, most people tend to think only as far as launch. But you have to see several cycles of business. So build enduring businesses as opposed to products. And even when you start with product, take it as a step or a stepping stone towards building a business. I think really that's
the core thing.
To me, that's the core. You have to think long range. You have to think about the business. Of course, the greatest challenge, which I think would be pretentious of me not to address, and I did comment on that, access to investment capital is the only reason why you find more innovations coming from the West than from Africa. It's not like we are less inventive, not at all. But without going into the history of how our societies evolved, they have had the benefit, let me see, I'm speaking to the West, the benefit of intergenerational wealth longer than we have. So coming across a family office that can write several checks in a year of $5-10 million.
And this is risk capital.
And some of them actually so since that is not our context, complaining is not the thing to do. Is to then figure out what's our context. How do we find and attract capital, because it is there, not of course at the level of where it is in the West, but malls are coming up every day. Apartment blocks are coming up every day, and they cost tens of millions of dollars.
Yeah.
How do I assure this investor that this is just as bankable? Of course, it is higher risk, but higher return. So that we start talking about portfolios of investment.
Yeah.
So there's a lot of conversations that we like this that need to happen, which is why I'm really appreciative of the work you're doing, so that we might convince one or two people who are sitting on $20 million to put $500,000 in a startup fintech.
And it's a mix of storytelling, and I think it's also a mix of corporates incubating and de-risking, so that now external capital can come in.
Yes. Just the last point which I wanted to make a point on, other than think about an enduring business as opposed to product, and also think whoever you have as your stakeholders and partners, whether you're in entrepreneurship within a large business or you're a startup, unless you're a really standalone, but if you have collaborators with you, I've come to appreciate that speed, which is very important, only comes when you have alignment. And a lot of people sacrifice alignment in the pursuit of speed. But get alignment with your collaborators first. Whether you're in a large organization, whether you're in a startup, without alignment, you create a lot of turbulence.
They will start falling off once you get moving.
With turbulence, you never have speed.
Eric, this has been an incredible conversation. Very thoughtful, very conscientious, and I've really enjoyed it. Thanks for coming on the show.
Thank you.
And the loop story needs to be told. And I think you also have a lot of storytelling to do, because to attract the right kind of platform partners. And so this is the right kind of path and it's the right kind of channel. But thanks for coming on the show.
Asante sana.
Yeah.
Thank you very
Cheers.
much. Yeah.